your host and the consumer quarterback, Brandon Rhymes.
And welcome to the Consumer Quarterback Show. We love to help you win as a consumer advocate here in Tampa Bay. And we touch on some national news and kind of let you know what's going on in the economy and things of that nature. We interview great expert contributors, and we've got an all-star lineup for you today as well. Bookmark our website, consumerqb.com. That's where you can see links to all of our expert contributors, the finest folks in all of Tampa Bay and the Gulf Coast region of Florida that we've assembled, we've vetted, and we bring on the show to help you understand your buying decisions, avoid commission-based advice, and make you more street smart here on the Consumer Quarterback Show. Save our hotline number. At some point, you may need it, 727-263-3707. That's 727-263-3707. You can call or text that line. Follow us as well at Consumer QB Show, at CQB Show on Instagram, at Brandon Rhymes 1 as well on the program. Today, we've got Andrew QB. He is our commercial lending expert, small business loans, commercial lending, lines of credit, and how to grow a business. We're going to talk with him as well. We've got Mark Haye in the house, financial advisor, expert contributor. We're going to talk about banks, some of these failing banks, what the government plan is, and, of course, the interest rates being jacked up once again. So we're going to have Mark weigh in on that as well. Amazon to lay off another 9,000 jobs, followed by Meta laying off major jobs, and Diamond heads first, Republic Rescue. So interesting stuff coming on. There's a lot happening out there, and we want to be that consumer advocate for you, help you understand those buying decisions. All right, so we've got a couple of hot listings here. As you know, this is the Consumer Quarterback Show powered by the Platinum MVP team at Keller Williams Realty, and we help our sellers sell faster for more money by featuring them live on air, maximizing the exposure for our real estate properties right here in beautiful Tampa Bay. We just did a major price reduction on this property over at Gulf City Road. It's 2817 Gulf City Road in Ruskin. This is developed land that you can develop and build on. 23 acres on the Little Manatee River, bay access out into the beautiful Gulf of Mexico. So imagine just building some townhomes, condos, maybe single families right there, put some boat docks up, and have your boat right there on the water. Beautiful property right here in Tampa Bay. 2817 Gulf City Road, Ruskin, Florida. One of our hot real estate listings from the Platinum MVP team. Let's stick with the vacant land motto here. We've got 12290 101st Street in Largo. You can buy some dirt. We've got some great opportunities to build here. This one has a feasibility study that's been completed, so you can put up to 22 single-family homes or 43 townhomes on this 10 acres, almost 11 acres of land in Pinellas County, in Largo. Great opportunity to build, develop right here in Tampa Bay. So we got 12290 101st Street in Largo. Beautiful property. And you can see all of our real estate listings at PlatinumMVPTeam.kw.com. All right, Mark Haye back in studio. Welcome back, sir.
Well, thank you. How are you?
Excellent. Doing well.
Good.
Doing
awesome.
well.
Awesome.
Yeah,
well,
man.
I was going to come in today and just kind of talk about what everybody's talking about is the banks,
Yeah.
and see what's happening out there in the economy and the world. But obviously, we know Silicon Valley Bank, went under.
Yep.
And looks like the government's going to be bailing them out, And obviously, we want people that have money in the bank to not lose their money. Those that were shareholders or bondholders, they're going to be out on that because that was their investment. But certainly, we want the mom and pops and businesses that have checking and savings. We don't want anything to happen to them.
Up to 250, right? FDIC.
Yeah. Well, and that's a little scary too. FDIC has about $30 billion to cover $13 trillion.
Right, there's limited funds, right?
There's less than 1% even available to pay everything that's liabilities. So when people say, "Oh, it's FDIC insured," yeah, but what is it insured with? I mean, we could print money, just like we're going to do now
right.
for Silicon Valley, just print money, but that's not coming from an FDIC reserve that has enough cash to go and said, "Okay, here we're going to bail you
right.
out." If they have $30 billion, I think Silicon Valley was what $200-some billion. I mean, we don't even have enough to bail that one bank out. So get the printing press going and start cranking it up again, and then people are going to realize the more money that's out in the economy and being printed, inflation is going to keep rising.
Right. Isn't that the problem, too, Mark, with this fractional banking system that we have ever since we moved off the gold standard? we have this very low limit, and a lot of people are saying, hey, we need to repeal Dodd-Frank. There's a lot of bad stuff in there, and it really favors the big banks. And I think that's what this globalist elite party, aka the illegitimate President Biden and his whole cronies, what they want to do is they want to weaken America, which they're successfully doing. And they're doing that through the banking system, through the open border, through drugs pouring across the border into our country, hurting. By the way, who's it hurting most? Military-aged young men and women that would go to fight. All these different areas. We could continue right on down the line. High crime in the big cities, but to me, it just seems like it's a organized effort. And now they're coming after the banking system, which they want to lead it to more control, where they can have the big three, BOA. The big banks ultimately in charge. Yeah, and
it looks like they want to go that way, and that's what we've talked about it before. The banks are not the safe haven for your money.
Right.
We talked in the Great Depression. I think it was like 9,000 and some banks went under during the Great Depression.
Right.
But the safest place to put your money is inside life insurance companies. And I tell people all the time, if you should have 6 to 8 months of reserves in your bank account. Don't get me wrong. The rest of it need to be invested somewhere.
Right.
But where are you going to put it? I mean, life insurance companies, if you put it inside there, 2% of companies' assets were affected during the Great Depression. Nobody even went under.
Wow.
So you take something like, and we want something safe, and we got to put our money somewhere. Well, don't put it in the banks, because we've seen this before throughout history, banks going under. And now certainly 2008 was the same thing, and then everybody got bailed out, and now it looks like we're going to do the same thing here. But, we don't have the money just to print and save these companies billions and billions of dollars. Just because we're going to do that, we just don't have that kind of money. And like we talked about, the FDIC has less than 1% of assets to even take care of the liabilities. So, if you really want safe money and safe returns, you got to put it inside life insurance companies. You got to get out of the banks. And we talk about cash value and other things. I mean, cash value pays 35 times more than a savings account, and it's still liquid. It takes 5 or 6 times more than a CD. These bankers, they take your money and they'll turn around and give you 1% or 2%, and they're literally doing what I'm telling you to do. They go to the insurance companies,
right,
give it to the insurance companies, and they get that return. They're getting 5-6% a year. It's tax free.
Yeah. And
so they have that, and it's liquid.
Yeah.
So, and I think it was like Bank of America. I think we talked about Bank of America has like 100 some billion dollars or $22 billion of cash value. Well, if you took all their real estate and combined it, that's only like $13 billion. So the majority of their asset is cash value. So they're putting it inside life insurance companies, and meantime, people are going to the banks and giving them the money for them to go do what we tell you to do. So cut the middleman out.
Cut the middleman out. That makes a lot of sense. If you just joined us, we're talking with Mark Haye. He's our financial advisor, expert contributor on the Consumer Quarterback Show. He can help you with these different decisions. And I think, Mark, right now, the average person, out there, they're working their 9 to 5, or maybe they're a contractor, a plumber. They're real estate agents out there. They're working hard. They're plugging some money away. They're putting some money away, and they don't really fully understand the dynamics of that. But for the average person, right now that's scared to have their money in XYZ Bank, and again, they're attacking these small regional banks. So I was looking at a stat. It said something like $15 billion that first week with SV Bank going under. $15 billion of liquidity was pulled out of small, regional, local banks and put into the big guys, because the mindset is, they're too big to fail, right? They're not, they're Bank of America, the Wells Fargo, some of these big guys, Chase. What does the average person need to do? What would be that smart move, that smart money move right now?
Well, I did see with the small banks, they did push for a 2-year FDIC every penny guaranteed, so no limit on $250. I don't know what the Congress, the government's going to do with that, but the little banks are fighting for something like that right now because of that, what you just said. Too much money is leaving too fast, and if it goes to the big banks, and they're just going to have 3 or 4 banks, and that's going to be it.
Consolidation.
So,
yeah.
And I do think, like you said, the theory of, I think that's the system wants that to happen.
Right.
So they need to have the big banks, and they can control the big banks and everything else. But if somebody came to us and said, what can we do with our money? That's why you would work with an advisor like us. Mm-hmm. We want safety. We want you to be secure in your decision when it comes to retirement planning, or just saving in general, or having your money liquid or tax deferred or tax free. That's why we do all this.
Right.
We don't just say, okay, let's go get 32 different banks because the FDIC has 250 and let's put it all in the banks.
Right.
No one ever would say to do that. And if it was true, then why don't the banks all do it? You know, why do the banks give $100 billion of cash value when they could have CDs? You know, go get a CD. You know, if that's a safe haven, you know, go do that. But the banks aren't doing it.
Well, even SV Bank, remember, part of their collapse that went down is because they had so much money in long-term bonds.
Correct.
Right,
Correct.
And then the federal funds rate changing affected that ratio, right?
Yep. As interest rates go up, bonds go down, and in 2022 saw one of the worst years ever in the bond market with close to 20% loss. So, you know, typically if the stock market's down, bonds go up, but now we're seeing stocks down, bonds down, and now the bank's failure, and so people are scared. But the good news is there's safe places to put money, and we like mutual, long-standing, strong insurance companies, you know, that are not in the stock market, that've been around for 100-plus years, that have been through Great Depressions and World Wars, and some of them have been around since the Civil War and before, you know. So those are the companies you want to put money into. And then people say, well, no one's too big to fail. That's true. I mean, we've seen it, you know, everywhere. But let's say a Guardian or a Northwestern would fail, which would just be insane if that happened. But if it did, all the other insurance companies just go and buy that block up. So you would see a New York Life come in and buy up an annuity block, and you would see a Mass Mutual come in and buy up the life insurance block. So they're a lot safer than an FDIC or a government backing anything.
Yeah.
And they're not making them go do that ESG investment.
Woke investments.
Yeah, where it goes environmental, social, government investment. And that's one of the things that happened with Silicon Valley. They were hard into that.
Yeah, that's right.
Hard into it. And they lost a lot of money. You know, it wasn't just, you know, people running out and taking the money out. No, they had bad investments. And it comes down to that ESG where you're forcing these companies, or these companies think that we have to do this because this is what everybody wants to do. And you're putting stuff into that's just not going to make money.
No,
you know?
That's
and
right.
So then it collapses, and then we're going to go bail them out. But it's like, okay, I don't want anybody losing their cash. Don't get me wrong. I don't want anybody losing their checking savings account, and families and businesses. But you can't have these companies go and make terrible decisions. And like you say, go woke, or we're going to put only in ESG companies, and then fail and say, oh, we want to bail out now.
Yeah, of course.
You know,
well, they bail out their cronies. That's what they do, and then they run the money through Ukraine and circle it right on back to the Democratic Party. And we've seen that happen over and over again, time and time again. Even Sam Bankman-Fried, you know, the guy gets put on house arrest at $1 million mansion. And, you know, meanwhile, if that happened to the normal, everyday layperson, you know, we would be suffering the consequences. So we're talking with Mark Haye, financial advisor. We're going to continue this in the second segment coming up here. Plus, we're going to talk about J.P. Morgan Chase CEO Diamond said to be spearheading discussions with other big banks to rescue First Republic Bank. Here we go. Again, another bank in trouble. Also, feel-good story of the day. An entrepreneur with autism is inspiring others with his pretzel business. Really cool story. I love this one. Coming up later on in our program in our feel-good story of the day. Follow us online at Brandon Rhymes1 on Instagram, Twitter, Getter, at Brandon Rhymes PA on Facebook, at CQB Show on Instagram, and, of course, our YouTube channel. Over 2,000 videos on our YouTube channel, Consumer Quarterback Show, consumerqb.com.
Brandon is Tampa Bay's #1 consumer advocate for real estate and financial advice. Call Brandon today at 813-917-1894.
All right, welcome back. Thanks for sticking with us. Brandon Rhymes here, Consumer Quarterback Show, powered by the Platinum MVP team at Keller Williams Realty, Livy and Coastal Elite as well. We just joined Gary Keller's personal expansion team now called Livy and Coastal Elite. Livy is the company. We got a hot listing here in beautiful Tampa Bay, 6504 South Linda Street in Tampa. This is a South Tampa property. Just a great opportunity to own a large lot, fenced-in home, beautifully upgraded on the interior as well. 6504 South Linda Street in Tampa. This is Hillsborough County, 1,900 square feet, 3 bedrooms, 2 baths. You got a 1/4 acre of land, updated kitchen and bath, motivated seller as well, willing to put money towards the buyer's closing costs. Check this one out, 6504 South Linda Street in Tampa. We also have a great waterfront property at 4501 Garnett Drive in Newport Richey, 4501 Garnett Drive. Now, this is a waterfront property, bay access out into the Gulf of Mexico. This is in the Bay Harbors community, very highly sought after community. 2215 square feet, 2 bedrooms, 2.5 bath. You got a private community boat ramp, open floor plan. You got a room for a boat dock behind this house as well. 4501 Garnett Drive, Newport Richey. Wide open floor plan, beautiful property, waterfront in Pasco County. You can see all of our real estate listings at Platinum MVP Team www.kw.com. Amen. Shout out to our troops out there, veterans, first responders, teachers, nurses, seniors, all the different demographics that we, take care of. We love and with our real estate business. So we're talking with Mark Haye. Mark Haye in the house. Innovative Solar, by the way, is our solar expert contributor. If you are thinking about solar on your home, please reach out to the friendly folks at Innovative Solar. Innovative Solar is a longtime friend of the program. InnovativeSolarFL.com. Online at InnovativeSolarFL.com, and it's much more affordable than you may think. The pricing has really come down over the years with the technology advances. All right, we got Mark Haye in the house. Mark, before the break, I was kind of teasing this story about J.P. Morgan Chase, Jamie Dimon, spearheading discussions with other big banks to rescue First Republic Bank, including the option of these banks investing in the California lender themselves. And interesting, another California bank. I wonder what's going on in California. Citing anonymous sources, First Republic. I love the anonymous sources, by the way. That's pretty much
just
a
say
way
whatever you want.
Yeah, say whatever you want. We don't remember. We couldn't find them. They wanted to stay anonymous. First Republic received a second credit rating cut. S&P Global Sunday, despite weeks injection of deposits totaling $30 billion by 11 big banks, including J.P. Morgan, Bank of America, etc. They had rushed Silicon Valley Bank. These collapsed customers withdrawn $70 billion from First Republic. Think about that, $70 billion coming and just withdrawing that from your banking institution.
I mean, it's a lot of money. It's a lot of money. But again, they should have better money managers. And like we talked about,
exactly.
The ESG, stuff that they say, we can only invest in ESG now, and we're not going to invest in, let's say, in Amazon because they're not part of that, program from the government. And
yeah,
anytime the government gets involved in anything, it's just like, watch it just get destroyed.
It's horrible.
It's just a shame. And then you talk about the bailing out banks. I think I saw UBS is going to bail out the Credit Suisse Bank. And when they do that, it's going to be now a combined of $5 trillion of assets under management just with UBS merging with them.
Wow.
$5 trillion with a T is something that I can't even comprehend.
It's a lot of money,
so that's just a lot of money. And if we're moving towards one world currency and just big banks, I mean, we're certainly doing it at a rapid pace. And I think that we're going to see more and more banks fall like the dominoes here that are happening. Yeah. Which is why I keep saying put your money inside life insurance companies, and I'll hammer it home. A couple of stats: 4,000 banks own over $160 billion of cash value. Bank of America has over $22 billion. If you took all their 5,600 branches in Manhattan buildings combined, that's $13 billion. Citibank has $5.3 billion of cash value. J.P. Morgan has $12 billion of cash value. Wells Fargo has $23 billion. 70% of their largest assets of these banks is cash value.
So is that cash on hand? Cash value?
On hand, cash value inside life insurance policies. I mean, there's no Disney World without cash value. People don't realize Walt Disney went bankrupt several times.
Really?
And if it wasn't for him pulling money out of his life insurance policy to save Walt Disney, there would be no Disney World.
Right.
Franklin Roosevelt, President Roosevelt, he died with close $600,000 of cash value. That's $8.5 million today.
In today dollars.
Just in cash value.
Wow.
So people have put tons of money in this stuff, and they're not putting it in banks.
Right.
And the Wall Street brokers, and they're selling these funds and these stocks, and they're not putting their own money in that.
Right.
But they're putting money in cash value because it's safe.
Because it's commission-based advice, right, Mark?
Correct.
I think, isn't that a lot of your industry? It's like the brokers. A lot of times they will do deals that pay them money, regardless of how it affects the client.
Yeah, and you'll have that. A lot of times with the fee base or the brokers buy selling. They have to buy sell just to get that commissions.
Right.
And certainly get paid, but. People are scared. People want to know where to put money. I keep telling them all the time, 6 to 8 months in the bank to pay your bills. The rest of the stuff, you got to put it away. And Florida has really good creditor protection laws when you put it inside annuities and life insurance. If you're a business owner, you're afraid of legalities. If you're afraid of getting in a car accident, getting sued, all those things. But Florida has really good laws to protect money. And let alone if you put it in some of these vehicles, you can put it in where it grows tax deferred, comes out tax free, income tax free in retirement, which means you get your Social Security tax free. You're paying nothing in retirement when it comes to taxes. And if you haven't been following, by 2030, they're saying our tax rate has to double just to keep up with all the spending. So if you think from here to 2023, which is going to be literally a wink of the eye, it's going to be before you know it, and your taxes double, and you're looking to retire or retired, you have $100,000 today to pay for your groceries and rent and whatever. You need $200,000 by 2030 just with our inflation right now.
Right.
With the taxes and inflation. So People are scared, but the good news is we have solutions.
Yes.
We can help. Don't rely on these big banks and government to help you. When you have people like myself and my firm to come out there and just help you guys, and it's free to talk to us.
And I want to play a clip here, too, about this bond market and stock market being divorced from kind of reality, in a sense. And I want to get your take on it. Mark Haye here, 21st Century Financial Group on the Consumer Quarterback Show.
Right now, as you watch the bond and stock markets, right, the movements in bond prices and stock prices are totally divorced from what they should be related to, which is the growth of the economy. Okay, stock prices go up if the economy is healthy, they go down if it's not. What's happening now is stock prices, when they go up, it's simply because the Fed's throwing more money into the system, and the money's got nowhere to go.
Big time.
And so, 401ks are down to like 301ks. They're heading to 201ks.
201ks, they're falling. They're cutting. And inflation is one of the most cruel taxes because it affects the poor the most.
Absolutely.
Right? The middle class.
And again, I'm hammering it home, but if you want inflation to work for you, you got to be in cash value because it goes with you. So interest rates go up, bonds go down. So people are seeing their bond portfolio in the last year and a half go down. But
which is supposed to be safe.
Right. But the interest rate continue to keep going up, so does the interest inside of cash value.
Right.
So like when the 80s and the early 90s, when interest rates were 15, 16, 18%, so was your cash value.
Yeah.
So it went with it. And so if you want something that's inflated, protected, tax-free, guaranteed, liquid, you can't go any safer than putting inside life insurance companies. But if inflation is a concern to people, which it is to a lot of people, you got to start looking at alternatives other than just we'll put in a 401k, and that's so old thinking. You need planning. You actually need planning, not just I'm going to put a 401k and retire someday.
Yeah.
Because you're in bed. You're in a partnership with the government when you talk about a 401k, and the partnership is when you retire 20, 30, 40 years from now, whenever that time is, your business partner is going to tell you every year how much they're going to take. And it's not okay, we'll make a contract and we're going to take 5% a year, but when you retire, I want 35, 40% this year. Next year, I want 50. So it's just not a good partnership.
727-263-3707. Give us a call, 727-263-3707. We're going to get you in touch with Mark Haye, 21st Century Financial Group. Mark, what's the website?
It's xxifinancial.com.
xxifinancial.com, consumerqb.com. And Mark, thanks so much. That's some great insights, man. Appreciate that. Yeah, you should definitely take Mark up on that. We're taking a quick break. Coming back, Andrew QB on the Consumer Quarterback Show, U.S. Commercial and Business Capital coming up here. We'll be right back. ConsumerQB.com.
Thanks for listening to my daddy's show. Please make sure to send him all of your real estate deals and subscribe to the Consumer Quarterback Show podcast on iTunes and Spotify, or check out our YouTube channel. Have a blessed day.